The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble and lovable and squeezably soft host, for another day of excellence in broadcasting here at TFNN.com. And of course, we've got action in the market. We're off 15 points on the S&P cash. It tried to rally up to 78. Yeah, 2078 on the S&P cash. We're back down. Look like we're going to test the lows fairly quickly. I've been bearish for a couple of weeks. We talked about it, what was it, 2 weeks ago tomorrow, that we went 100% short in the short-term newsletter. And today we took more cash off the table. We'll get into that, but we've got now two big winners out of the positions that we have. I suspect we're going to have probably 9 out of 10 winners, 8 out of 10 winners, and those winners are going to be rather large. And we'll talk about that. But so far, the first one was last week. We took the VIX trade off at, around 40%. We took off a trade on short China at a little over 30% today. On the longer-term newsletter, we got out a stock that we were short $95 and covered today at 79. We still have some longer-term positions, and any kind of rally out here, I think I will probably be selling short. I don't see anything that is other than putting some lipstick on a pig, and that is a market that is no doubt going down, at least in my opinion, going down until we find the guts in the FOMC to raise rates. I think at that point, everybody's going to say, oh, the economy must be good enough. They raised rates. But until then, I think it's a cloud over the markets and kind of tough to see what's going on. Now, why would I cover? I think the answer is fairly plain, and that is manipulation by countries. And, of course, I suspect that we're going to see a great deal more manipulation over the next weeks and months from China of their market. And like I said at the end of every show, sell when you can, not when you have to. At the same way, it's the same time, cover when you can, not when you have to. But I suspect that, if you look at the commodities out today, just getting seriously hammered, this is kind of the first level down in what I think is probably a low in some of the commodities. I think we talked last week about a low in crude, which I thought would come in somewhere around 53 to 55, and we got that pretty much today. Probably some kind of washout. I don't see the volumes yet in the contracts, but I bet we're probably going to have some huge volume in those contracts. Could it go down a little bit lower? I think the answer is yes. But if you were short at 61 bucks and you covered it, 53.50 today or something, I think that was probably a good trade. Probably any more than that, maybe you're getting a little piggy on us, as they say. And it's borne out over my trading career so far, and that is bears make money and bulls make money and pigs get slaughtered. So always willing to take some cash off the table when it's fairly plain that the lion's share of the money has been made. I think that there's going to be yet another opportunity, and I think we're going to start seeing these markets make ABC downs, and I think maybe we saw kind of probably a bottom, or at least an exhaustion move on crude. Can it come back up along with the rest of the commodities? I think it can. Probably going to see more manipulation of the dollar from Janet Yellen and our Treasury Department and the euro, although that's going to be very tough to do. But as we look out here today, what happened, they took it right up to 96.62 on the dollar index on the continuous contract, and they've been pushing pretty hard on it most of the day to keep it down, but 96.20 right now. My guess is that we came back into that trading range and they're pushing on it. They'd love to keep it around 95 if they could. I just don't think that they can. I think the energy where it blew up today is going to be hard for even the Treasury and the FOMC and the EU, which is what, 50 or 60% of all the dollar index. Going to be very tough for them to go out. Anyway, I'm looking for this test of the low of the day before we go out for the end of the day. And that's at 2058.40. We're at 2063.50 on the S&P cash. But you know, I can see probably China at least trying to stabilize their markets. The volatility may be out of it for a little while, but we'll wait. If they'll continue to do the wrong thing, which is just not let the air out of the balloon, and of course cause yet another balloon that we can short once again. Well, we'll say. Apparently somebody in the den wants to be called a porky pig. But what else can we do? Well, we can start with a little bit of histoire. Everything is awesome. Well, it's not only awesome, but I have a feeling that we did something wrong here. I wanted history. That it's all just a little bit of history repeating. On this day in 1988, an explosion rips through an oil rig in the North Sea, killing 167 workers. It's one of the worst offshore oil rig disasters in history. The Piper Alpha rig, which was the largest in the North Sea, was owned by Occidental Oil, had approximately 225 workers on board at the time of the explosion. It was located out 120 miles off the northeast coast of Scotland. And on the evening of July 6, a gas leak led to a massive explosion and fire on it. A fireball 350 feet high erupted from the platform, knocking a lot of people into the cold water, and most of them either burned or drowned. I don't know which one's worse, probably both. And, you know, from that, a lot of this kind of industrial work is not, a lot of people would like to think it is, but it's not without risk. And whether it's the BP oil spill in the Gulf, there's always going to be, especially in these industrial efforts, problems. And you never know when your stock is going to get hit on one of these. But I think Occidental got hit fairly good on this deal, if I remember right. Wasn't it actively trading in 1988? I kind of vaguely remember it was. But just there's always that black swan ability of the market to come out of nowhere. Probably a good example of this in 1988, when things happened that weren't expected. The Eurozone, of course, down a little bit. It could have been a lot worse. DAX off 1.5%. FTSE off 7.75%. And the French index, the CAC, probably for cackle, off at 2%. When we go back over to Asia, a lot more interesting. Nikkei was off 2%. Shanghai was up 2.5%, but off of severe manipulation in the Chinese market, was up almost 8% earlier in the day and sold back off, kind of like our market out here. Tried to go higher, found a lot of sellers, and the HSI was off at 3%. This was one of the ones where I suspect that we're going to see a great deal of manipulation, at least in the China markets. Probably not as much in the Japanese markets, because I think we've already, the bell's already tolled on that one. They can manipulate all they want, and it's not going to have near the effect that with the China stocks are being manipulated. But I suspect that they're going to do whatever it takes, not to get the market to go higher, but to get it to go sideways and bore everybody. And that's why we went ahead and took our money. We were operating on the with the Yang ETF. That's YANG. We got into it, I think, 59 bucks, a little bit better than that. Got out today at 77 bucks. Had a nice profit on that one, and I think we'll just ring the register here and wait. But I suspect that we're going to get yet another swing at these markets. In fact, I sent out in my newsletter this morning a wonderful article that talks about the bubbles and put together a much better way than I can explain just how bubblicious these Asian markets have been, especially the China markets. But, we're down $2 trillion already from the highs in the Asian market. Normally that means there's a lot more to go. There's a bigger problem out there that we haven't seen, and that will be contagion. The only thing is that we'll see, especially governments now, heavily getting involved and just making yet one more bubble that you can short all over again. But don't see a lot out here that really makes me think that we've seen the lows in the Shanghai, just that the central bankers are going to do everything they can to make sure that it is slower and, as they like to say, orderly. What they don't like to see is panic, because that causes all kinds of problems that they can't fix. And that's pretty much it. They don't want it to get wild. They're going to do everything they can. Manipulation of currencies, all the things that they're doing in China now, like canceling IPOs. There's a lot of that stuff. It lasts for a little while, but if there's a true underlying weakness in those markets, it will not matter. It only means that they put it off for a little bit of time. I'm just expecting more rather than less intervention in this. And maybe they are able to keep this thing flat for a while, or even make it go up for a few weeks. But then what we're going to have is the next leg down. And normally it's not going to be the kind of huge move that we've already seen, down 30% in those markets, but it's going to be a low, slow next 20% down that may take months. But we'll continue to look at that. Of course, Greece is out here causing issues once more. And we talked about it last week. I have no qualms. I'm actually at odds with just about everybody I know, who all says that Greece has to stay in the EU. I don't think they have to. In fact, I think they are the sacrificial lamb for those that would want to get the exact same treatment, i.e. Portugal, Spain, and others out here, that if Greece gets their way, then the EU is probably more damned than having the sacrificial Greek lamb out here. And just because it calls for it, and I can do it, we need a montage.
Gonna need a montage. Ooh, it takes a montage.
Yes, we need a montage because Greece had their vote, so we've got to have a no montage.
No! 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 No!
We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then, as of this moment, they're on double secret probation.
And yes, they are. I talked to Andy Hecht last week about how Animal House applied to the Greek situation. He took it and ran with it. And boy, did he run with it. He's got a great article out there on Seeking Alpha today about how it all comes together. And it's all by the wit and wisdom of Animal House, the movie. But what else can we say? I couldn't have done better if I wrote it myself. It was like it came right out of my brain onto his paper. But it was very interesting out here. But do read it and check it out. I think he'll probably put some links in the den if you want, or I can always send you the links. If you want, you can always email me at path@tfnn.com if there's anything that you have a question about, and I'll try to send you back links or an explanation if what we're doing basically comes up in what you're talking about.
Food fight!
Yep, it is a food fight out there in Greece. I am not of the opinion, though, that they stay in the EU. I suspect that they leave, and that is because I know socialists. I know their history, and they would rather burn everything to the ground than admit that 6,000 years of recorded history are wrong, and they are right. But that's the definition of insanity, isn't it? Trying the same thing over and over and getting the same result and continuing to try the same thing. We did have a little news out here, one stock that popped up this morning, although it's given a lot back, and that is Weight Watchers. A lot of rumors floating around out today about all kinds of buyouts, trying to get something going. Weight Watchers did pop up today on that, and a pretty nice move on a day that's fairly weak in the markets. But if you can see the chart out here, it's given a great deal of that pop up, but a nice pop nonetheless out here. But rumors and more rumors out here from the New York Post about an impending takeover, although this stock has been beaten worse than a red-headed stepchild or a seal on an ice floe. Anyway, had some emails, and we're going to talk about this for a while before we get into charts. And basically, it was about statistics and why I was short, and why several people said that they didn't see the indicator that I saw for the markets going significantly lower and still significantly lower. So we're going to talk about that today, and why everything that we see is not a line on a chart. Sometimes it's more, at least for me, more statistical in knowledge. And Nassim Taleb, who wrote Fooled by Randomness, has this quote, and I haven't seen anybody ever say it any better, and that is, statistical and applied probabilistic knowledge is the core of knowledge. Statistics is what tells you if something is true, false, or merely anecdotal. It is the logic of science. And if we want to apply stuff to the stock market, which is notoriously good at fooling us with randomness and stuff that should not be counted, some stuff that should and some stuff that shouldn't. His entire job, and one of the reasons why we have markets, is because a lot of people are wrong at the wrong time, and they're way wrong. But there are ways to take a look at the markets that maybe is a little different than other people. I had a few questions, so I'm going to try to answer them today. We got a little bit. First of all is that you need to know is that correlation does not imply causation. Of course, if you're down here in Florida, ice cream sales are going up and also drownings are going up. But if you're anywhere in the Midwest, probably the same thing has happened. Just because there is correlation does not imply causation. And of course, ice cream going up does not mean, of course, that ice cream causes drowning. We have some things that when things are both warming, both things are correlated. When weather gets colder, guess what? Less ice cream and less people drowning. But guess what? A lot of people want to confuse a lot of this stuff together. In fact, probably the worst analysis I see on CNBC is the implied causation without any real rigorous testing. You can do that by a thing called the correlation feature of Excel, or you can even get free versions or public open source versions of Excel, and you can actually test it. We're going to talk more about what correlation actually means out here and why I see continued weakness in this market going forward. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I'm going to talk a little bit. I had some questions about my model because I do run one in the markets, but mostly it is looking for examples of not when something's going to happen, but when conditions are right for something that could happen. And normally when we're looking at markets, especially one-sided markets that go up all the time, you want to look and see when the correlation of stocks to the indexes start to break. One of the best tools out there that I talked about for years, of course, was the summation index. The problem with it is that it's somewhat ambiguous in the way that you interpret it. I've spent a lot of time looking at the summation index, and it is very good, but it has some, I'm not going to say major flaws, but I'm going to say medium and minor flaws in the way that it works. If you've ever taken basic statistics, there's a thing called a correlation feature, and that is if you have two different things together, let's say like the S&P and one stock that's in the S&P, how close does it mimic the actual index? And you get a number, if you use correlation, a Pearson correlation, of 1. If it's 100% correlated to the stock, i.e. it moves $1 up, then you're going to see a ratio of that stock move up that would be the equivalent of a $1 move, of course, in the S&P. So a 1-to-1 move, even though the items are not at the same price, right? So if you look at my example here on Tiger TV right now, I've got a little tool that I ripped out of my model just so I could show here on the show today. But I've gone through and go through about 5,000 stocks And part of my model that runs every day is checking to see what the relationships are to the S&P and other indexes. In this case, I'm comparing it to the SPY just for ease of use. It took me a little while to roll this program together yesterday morning, and I wanted to, and probably as easy as possible. Mine's a little bit more complicated. But the SPY and the SPY, of course, would be a 1. That is a 100% correlation. If that number came in at 0, then that would mean that you probably are looking at things that are not correlated at all, i.e., one or both of them are random noise compared to the other one of them. And of course, if you have a negative one, it's 100% negatively correlated to the other one. Now, all I have now is one of the things I look at, which is how many stocks are and continue to be at least 0.95 or better correlated to the S&P. It's kind of like the same thing as the summation index, but if you use correlation, it not only gives you a yes or no answer, which is what the summation index does, right? All these stocks are higher or lower than the prevailing indexes, or closed higher or lower, and it puts together that with a moving oscillator to do it. But what this does is always tells you how close something is aligned with something else, even though the numbers don't come anywhere close. Well, you should see pretty much in a bull market that the majority of the stocks that are highly correlated to the S&P remain about the same. And what we continue to see are or at least what I've seen for a while, and why I went short 2 weeks ago on Tuesday, I went 100% short, is the incredibly light amount of stocks that were still correlated, i.e. there were very few stocks pushing the S&P higher each time. And I continued to see less and less correlation, i.e. there were stocks going down while the S&P went up. Now, if the number was negative, that would have been that they were significantly going lower as the S&P went up, and that's not it. But they do, especially in the top 100 stocks. When you start see that top 100 stocks in the S&P really start to lose correlation and not move up, and you get a very, very thin market, that's when you really need to look at it. And if you're looking about being a technical trader and actually using maybe a little bit of statistical science to help you out here, I recommend always looking at the correlation feature. And you don't have to be a great programmer to use it. There's videos on YouTube, but you can see fairly easily with the correlation feature in Excel, or even some of the free versions. You don't even have to buy Excel. There's a LibreOffice that has a spreadsheet in it. It doesn't take long to do, get the data, put it in, and see just truly mathematically how close these stocks are and how they are correlating with the bulk of the market. And this is one of the best tools because, like I said, you don't get any vector with the summation index for the most part. That is how far. All you know is stocks went and closed higher or lower. And they may be closing $1 lower on the days that they're lower, and pennies for a week higher. And that's the old 3 steps forward, 2 steps back kind of thing, right? So we want to look and know over time. And one of the best statistical tools out here, it's easy to understand. If you need any more help, or you want me to point you to YouTube videos on how to do it, just email me at path@tfnn.com. Also, you can always call us here at 877-927-6648. That's 877-927-6648. And guess why I'm doing this. Where's my, there it is. To why I'm doing this, I'll do one different one out here. We showed you all the stocks that were highly correlated. It's just as easy for me to say I want all the stocks that are negatively correlated. So I want them less than or equal to -95 and greater than, that are also less than, but greater than or equal to -1. And I'll run that while we're talking out here. Anyway, let's take a quick look at the markets and see what we have. And we were getting ready to test it. Oh, there's some great websites out there if you Google for correlation is not causation. This was a great chart. Let me see if I can put that on it. I can't do that, can I? New tab? No. It just opens a new tab. Anyway, this one, I can't put it up right now, but it shows how swimming pool correlates exactly with the number of films Nicolas Cage appeared in and when they appeared. His movies came out in the summer, and guess what? Drownings went up in the summer. Just don't get fooled is what I'm saying out there. It's easy to do that. We're at 2061 on the S&P cash. We're off 15 points. We're getting ready to test that 2058.40, the low of the day out here. And my guess is we're probably going to see additional selling into the close today. And then I'm going to start looking. I still have, 75% of my shorts on. I'm going to look for the rest of this market to start seeing a lot more intervention by the central banks again. They want to slow this down. They can't stop it, but they can slow it down. And I suspect we're going to see that around the world tonight out here. But I do digress. Oh, here we have. Now, here's the stocks that are all negatively correlated to the S&P. And they're all the ones that you would think of out here. SDS, right? SPXU, SQQQQ, TEX. Pretty easy to figure these out, but check out correlation. Just thought I'd pass that on to you today as we get into charts here now, as I got off my life out here. What else do we have? We've got 6 minutes. This morning in my newsletter, I said we really wanted to watch how volume came in, especially in these big energy companies out here. And so far, not a lot of volume out here. We do have a doji in ExxonMobil, XOM, and you had 14 million shares a couple days ago. So pretty much set up for a nice test of that 82.11, which we kind of got into today. But the low out here was 82.12. So we missed it by a penny, probably close enough. But 16 million shares is what we were looking for from the March 13th low, $82.68. I suspect we're probably going to see some people try to pile in to this stock over the next few days. The question isn't whether or not this thing bounces for a day or two, but whether or not we see the same kind of thing I've seen in a lot of other stocks, which is we see these lows and they continue to go lower, even though they don't have the volume. The volume comes in a few days later. But of course, at 53 bucks or whatever crude is now, hopefully I'll catch it during the break. We certainly do see these things hanging out at lows. I don't see a lot of people piling into these, and my guess is that we are going to go lower, probably close lower on these stocks. But a lot of energy stocks are right here at this level. The reason I bring this up so much is that stocks like these don't crash at highs. You find the kind of the jump the creek stuff in exactly what we're looking at right now. And it would be different if ExxonMobil was the only stock doing this, but there are a great deal of these energy stocks that are either busted their lows or hanging out at their lows, and they're really not getting that kind of movement. Now, on the high end, if you're, of course, a wonderful refinery, you love these low prices out here, but at the same time, not getting any love out here on the highs for Valero, VLO. This thing probably should have been able to bust through its highs. You're basically looking at the previous highs at about 10 million shares. March 25th got to $64.49 on Valero. You busted through it. Are you going to hold above it? You may out here. What I dislike in this is the energy down from that March 25th high to the April 30th low was about, we got about 80% of that back up to this high. So there isn't even in these stocks that probably should be loving these low crude prices and checking it out. Maybe it's a crack spread issue out here, but you would think that if these things loved low crude prices, then they'd really love this high price out here. But a lot of these companies that we're all looking at in these energy spaces continue to hover around these lows. Even though the volume's light, they're not rallying, and that's what you've got to watch out for, because a lot of times it'll just be one day and you'll jump the creek and all the volume comes in when you're down at these lows, even with light volume out here, mostly because the energy down on these was not that light. So you want to keep an eye on that. You can always email me at path@tfnn.com and see if we've got a couple of emails. I'll try to catch those during the break. But you can see out here. Anyway, Tesco, another one of these, sells a lot to the energy sector out here. My guess is that we've got a lot of these high volume lows that haven't been tested in a lot of these stocks. TESO is one of these. And until we get these piercing these lows and the volume reverses, I'm going to say that we still have enormous amounts of problems in this sector. TESO, excuse me. Low on January 9th was $9.53, 1.1 million shares. We still probably need to get that. And my guess is in the next 2 days, we probably test these high volume lows. And there's some stocks that don't look so bad, but I'm going to need more of these stocks out here, not less of them, acting and not and getting some love. Let me put it that way. They need some love in the next couple of days, or more than likely, we're going to see these things jump the creek, and it's going to be one big gap down in that energy sector. There's not. I can talk to a lot of people about stocks that look fairly decent. The downside is that they came down with a lot of energy. Not a lot of energy the last few days, but they're at bigger or longer time lows, and there's still high volume lows out there that have not been tested. Workaday out here, if you just look back to July 17th of last year, you'd say, okay, lows come in around 76, 75 bucks. They've been fairly low volume. We've got a low volume move out here and a little love today out here, up on 1 million shares. But what happens if we bust down just another buck? Well, that takes you back down to the April 28th low of $64.21. I love this company. I love everything about it. I dislike the fact that these things are just hanging out at their lows. Hanging out lows or hanging out at highs. I give them about 3 days, and then the hair on the back of my neck starts standing up and gives me the willies and lets me know that there's something probably else going on out here. At best, the stock goes sideways for a while, builds cause to go higher. At worst, you do jump the creek. I was going to say jump the shark, but that's something else. That's happy days. Anyway, if we jump the creek out here on this one, that is where the real risk comes in. And of course, you got those high volume lows. In this case, a 5.8 million share low that goes back to that April 28th, 2014 low. And it just looks to me, I went through a ton of stocks over this weekend, that whether or not we have volume out here, it certainly looks like these stocks want to come back and test these low volume lows. And we're not getting any real huge bounce in most of these stocks that should bounce fairly well and have a lot more volume than we probably have today and the last week or two. So we'll be back in a minute. You still have time to give me a call, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, and we're going to have Larry in the next hour. So make sure and hang on to that. And, of course, we're going to be back in the 4 o'clock hour. We'll do the wrap-up today. I'll be going through a bunch of stocks that are going to have earnings starting on Wednesday, of course. Alcoa starts the earnings cycle out here. But we'll go through the next, 7 trading days, 8 trading days after that, and we'll talk about all those stocks coming in. A lot of people already saying that earnings will save us. I suspect that they are highly optimistic out here. Nordic American. Got a question on that from SK, who doesn't tell me where he's from or what he's doing. He must be a disembodied Nordic American. I think he's talking about NAT, N-A-T. So let's take a quick look at that. Nordic American. Well, this thing certainly, I guess the question is whether or not this thing is topping. And you've got a wonderful, I've been talking about this pattern for 2 weeks because I've seen it in so many of these ballistic stocks. But certainly you want to watch this one because any close back below either a 9-day moving average or a 3x3 moving average would be a big short signal. I don't short $15 stocks, but it would certainly say that you have a top in that. And of course, I haven't seen any significant change in the Baltic Dry Index out here, and So as far as I'm concerned, I don't know what's specific about Nordic, but they're doing well. But other than that, this thing could be in a way for a major failure. In this case, this could easily come back down to $11.50 low out here with one more close below the either 9-day moving average or 3x3 displaced moving average. So if this thing would close back in the next couple of days below 1450, you really have to think that the sell signal is in on this one. Mr. Disembodied Voice from Nowhere and SKA something or rather for an email address. Anyway, just tell me where you're calling or you're emailing from and a name so I can keep track of these people. But we'll see. Anyway, other stocks out here that are very interesting to me in the last part of the show. Now I hear that there's news breaking out here, and the Greeks are going to be talking about what they're going to do now that everything's kind of blown up in their face. So we go to our Greek correspondent very quickly to get a comment.
We got to do something. You know what we got to do? Toga party.
Yep, that's what they're going to do, Toga party. Check out that article on Seeking Alpha from our friend Andy out here. Anyway, wanted to look at a few other stocks. We had a lot of these stocks make massive moves. Cal-Maine was one of these on the the bird flu out here. CALM is on this one. This thing's been kind of moving back down. What you would like is this thing probably get around $46 out here. It doesn't look bad on the chart. And if I was thinking about going long anything in the near future, I probably wouldn't mind ag products out here. I know that they got smashed today, and we're probably going to hear more about them in the next hour. But it doesn't look all that bad. In the meantime, we're looking at a market that certainly looks like it could auger in by the end of the day. 2061 on the S&P cash. Not a lot of volume so far, 2.3 billion shares, but a lot of that volume comes in the last 15 or 20 minutes anymore. As always, so when you can, not when you have to. We'll see you tomorrow, same bat channel, same bat time, and in the 4 o'clock hour today. Hang on for Larry, and he'll probably be talking a lot more about the commodities today. See you then.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.